We are in the middle stages of what we'll probably look back at as the disbelief rally of 2025. This rally is so different mentally, psychologically than every other rally of the last few years, starting January 1st of 2023 to November of 2023 to February of 2024, November of 2024. It's been the same thing. There's been a lot of belief with those rallies, and this rally is different, which is a good sign that it's going to continue. And where do we go from here? My goodness, I don't know, but I am comfortably holding right at this moment, and we'll see how things change over time. But okay, before we dive on into this, do me a favor, hit that like button, subscribe to the channel, and leave a comment in the comment section, all for the algorithm. Let's start out with the Fed and Bitcoin. A post from Swan here. The Fed isn't in control anymore. We've entered a new regime where deficits dominate and monetary policy plays second fiddle. It's called fiscal dominance, and it changes everything about how Bitcoin fits in your portfolio. I've talked about this. I talked about this in yesterday's video. I'm really nervous about the 10-year yield, 20-year yield, 30-year yield. I'm nervous about the fact that it seems as if the Federal Reserve is losing control of something that they've been able to control for the last 40 plus years. They're losing control. And what does that mean? Short term, that may not mean much, but over the next decade, that's going to mean a great deal. And we need to, this is imperative. If you want to preserve your wealth, we need to consider what that means for hard assets like gold and Bitcoin and real estate. Okay, so let's move on in this tweet. For decades, investors watched the Fed like hawks. Rate hikes and QE were the game, but today it's the U.S. Treasury and Congress, not the Fed, that set the tone. The debt is too big. Monetary policy is cornered. And I am telling you guys, if you don't understand this, monetary policy is cornered. They are stuck between a rock and a hard place for the first time since the 70s, okay? So this is fiscal dominance. When deficits are so large, central banks lose control. They can't raise rates too far. They can't shrink the balance sheet for too long. They can't fight inflation without fiscal crisis, so they stop fighting. Lynn Alden puts it clearly. Their tools just don't work the same. It's a whole different regime. Monetary policy can't clean up fiscal excess anymore. It's now a hostage to it. The deficits aren't cyclical, they're structural. That's why the meme works. Nothing stops this train. It's not just a slogan, it's a macro thesis. The U.S. is locked into perpetual deficits. What is your escape plan? Gold worked last time, and it's going to work this time for sure. But gold is slow. This time, the world has something better. Scarce by code, instantly verifiable, globally portable, immune to trade wars. Bitcoin is monetary armor. That's why Bitcoin has outperformed every asset since 2020, not because of halving hype or ETF flows, but because the macro regime has shifted. This isn't a trade. It's not about rates or CPI prints. It's about owning the only monetary asset that sits outside the system and thrives as it melts. The old world was ruined by interest rates. The new world is ruled by deficits. Bitcoin isn't just surviving this transition, it is being repriced for it. And when we think about Bitcoin breaking, another chart that I showed you yesterday is this diminishing return chart, which I'm telling you again, that diminishing return chart will not be providing diminishing returns forever. There's going to be a point when it breaks that to the upside. Just like lots of other assets have done historically, it makes sense to be holding Bitcoin. And I know we have the Bitcoin maximalists who say that they never sell their Bitcoin. I'm telling you guys, now more than ever, you should not be selling your Bitcoin. I mean, sure, if it goes up to $600,000 in 2025, yes, there will be a correction. Okay, but otherwise, I have no interest in selling my Bitcoin. Moving on, Tony the Bull Severino. Bitcoin will golden cross any day now. Is this the all-in signals bulls have been waiting for? Or will this simply further bait a bull trap in the making? Or is it just nothing? Okay, is it just look at the death cross? Okay, when did we have a death cross? If you don't know, golden cross and death cross. Death cross is the 50-day moving average moving to the downside in comparison to the 200-day moving average. A golden cross is crossing over to the upside. Look at when the last death cross was. It was pretty much at the bottom. And so if you look at historically, every death cross, what has happened is that it's been 50-50. It's either been a bottom or it's been just, we're going to continue. So literally, I believe that the death cross and golden cross are nothing. Now, hopefully it's not like what it was last time where, all right, if that marked the bottom, does the golden cross mark the top? And it's 50-50. Okay. So golden cross, death cross in crypto, forget about it. It's dumb. It means nothing other than, maybe if we're at a golden cross, you should consider starting to take some profits, but that's not what cohorts are doing, Bitcoin cohorts right now. I'm going to probably share this chart every week and just give an update for this chart. I've shared this in videos every week in the last month or so, and I'm just going to look for it every week. And you can see on this chart, blue is good, okay, red is bad, and there has been a lot of accumulation recently, very recently, but there has been, as of recent, every cohort is either neutral or accumulating. You can see the cohort under 1 Bitcoin accumulating, over 10,000 Bitcoin accumulating, everywhere in between except for the 1 to 10 cohort, which is net sellers as of right now, but very lightly net sellers. And so Bitcoin is being accumulated pretty much across the board. And if this is going to remain the same, look at historically just what that has meant. If we're at the start of this blue phase, look at what accompanied that as far as price action was concerned, was upward movement in price action. And it looks like we're at the beginning stages, the early stages of a blue phase. This seems bullish to me, but let's moving on. Bitcoin heat macro phase. I'm loving this from Axel Adler here, somebody whose charts I share very often. So this model takes into account key on-chain data, MVRVZ score, ASOPR, delta long-term holder minus short-term holder plus ETF flow momentum. All components are normalized, resulting in a fast oscillator that reflects overbought, oversold thresholds. High values greater than 0.7 indicate the late phase of a macro cycle distribution. When overvaluation, profit realization, and flow momentum are high, low values correspond to the accumulation phase. And you can see when's the last time this got into overheated territory. It was pretty much at the peak in early 2024 and very close to the peak in late 2024. And so you see this get up to same level, overheating, or a peak level. That's probably a time to be a little bit more cautious. And so fantastic chart from Axel Adler. Give him a follow, turn on notifications if you want to hear more. Oh, I didn't even notice this. The start of the ETF, it got scorching hot at one point, but that was just an anomaly. So moving on. This is huge. Okay. What am I looking at here? Senator Bill Hagerty says crypto stablecoin issuers will be the largest holders of U.S. treasuries in the world. I tweeted about this on my account. Follow me on X, WWBitcoin. I tweeted about this on my account, and I just kind of had an epiphany moment. The government is pushing all of a sudden really hard for stablecoin regulation. And why would that be? I mean, if you think about everything that I just said with the 30-year yield, the 10-year yield, the 20-year yield getting out of control, what we're seeing from the federal government in the United States is an attempt to get it back under control. Because here's the deal. If you are a stable coin issuer, if you are Tether, if you're Circle with USDC, you want to print as many stable coins as possible. So you want to make the crypto industry as big as possible, and you want the stablecoin market caps to be as big as possible. And then what do you do? Because you must have one-to-one backing. You need to own as many assets as the circulating supply of Tether or Circle. So it's a no-brainer as to what you should do with that. You should buy treasuries. And the more that stablecoin issuers buy treasuries, the more that it's able to be in control and the more that they become too big to fail. Okay, so it's fascinating to see what's going to happen here, but I wouldn't be surprised if USDT and USDC became multi-trillion dollar market cap cryptos, and that ended up being a fantastic thing for the United States. Okay, so right now, the United States has an incentive to grow the crypto industry as much as possible, because that's kind of the thing that's going to either kick the can down the road or actually get this under control when it comes to managing yields. Man, we're in the early stages of either we lose control of these yields and I don't know what to say, or like this last ditch 11th hour thing coming in to save the day, which amazingly is stablecoins. Oh man. But of course, yeah, they want to push this really hard. So that stablecoins that they will buy, and they want to, I'm sure, have their own stablecoin that they'll buy treasuries. Another thing in talking about Bitcoin here, about crypto, Bitcoin, Mitchell Hodl, we haven't actually experienced, believe it or not, Bitcoin scarcity yet, but we're getting there. If we had, you wouldn't be able to acquire one Bitcoin for roughly half the average American's annual salary. Diminishing returns is BS. It's not yet, but it will be soon. 2021 was just a teaser for the rest of this decade. Listen, I've talked about this before. There was an all-time high. Literally, we are not going beyond this level. There was an all-time high for when we had Bitcoin, the amount of Bitcoin available on exchanges. And coincidentally or not, the date of that all-time high happened to be the week, at least in the United States, when everything shut down during COVID in 2020. What do we make of that? I don't know. I don't know. But that happened to be the week. That also happened to be the time in response to the week that everything shut down in the United States, March of 2020. The response to that was money printing out the wazoo, that people started fleeing to Bitcoin and to other cryptos, but mostly to Bitcoin. We saw a lot of $1,200 purchases of Bitcoin in the United States in March of 2020. What was that? That was people just putting their stimulus checks straight into Bitcoin. And now that if they held on that entire time, that $1,200 is more like $40,000, something like that. So from here, where do we go? And you can see it laid out very well here. You know, each epoch, each halving, the amount of Bitcoin available on exchanges kept on increasing. But then we have the 2020 halving, May of 2020. And since then, really, it's been March of 2020. We have been in decline. And right now, from that point to today, we are down the amount of Bitcoin available on exchanges by 1 million. And this is only going to accelerate. And what does it look like when this is closer to zero? Are you actually going to be able to buy Bitcoin? That's something you need to think through. I know you think that this is going to be a thing forever to where you can buy Bitcoin, but I am telling you it's not going to last forever. And you are going to look back on the 2020s as this amazing time, this wonder world where you could have bought as much Bitcoin as your heart desired. Those days are fading, and they're fading fast, but you still have time. So I know you want to make your maximum gains on whatever else, on other altcoins and everything like that, but you've got to be acquiring Bitcoin. Acquire, buy and never sell. Be in the 1%. Man, okay, let's move on. Stablecoins. The 90-day change in stablecoin market cap resembles the first peak in 2021. So what does that mean? We'll get to that. Although the total value of stablecoins keep growing, now surpassing 231 billion, the 90-day variation shows a slight decline, signaling lower interest in altcoins in the short term. But watch out. If this curve starts rising again, it could drive crypto prices higher, just like it did in July of 2021. That's because the amount of stablecoins available is so significant that liquidity naturally flows into Bitcoin and altcoins during bullish periods. And so the thing that I wanted to draw your attention to was this peak in stablecoin change, the increase in stablecoin market cap. Just think people are buying stablecoins so that they can buy Bitcoin, buy altcoins. That what this post is saying is that this is similar to this first peak in 2021. And so where do we go from here? This is kind of a base case of mine that whatever peak we have coming up short term in May or June or July is going to probably be similar to the peak in November of 2021, where we just went a little bit higher. But, you know, I could be wrong about that for sure. Could be wrong about that. But that we have another new all-time high. I mean, we've gotten really close. We hit $107,000, you know. But something to pay attention to. It's interesting to see what happens. You know, these peaks tend to seem to happen post all the excitement. They're rising throughout the excitement, but then they peak. The stablecoin increase peaks a little bit after the excitement, and then whatever. So we see a rise. We start seeing a rise in stablecoins. That's a good sign. That's a good sign short term. And then we, you know, at some point during that rise, is a good time to exit. So moving on. SUI. I don't have anything altcoin related other than SUI here, but something to pay attention to. I'm fairly heavily invested in the SUI ecosystem. SUI has the highest total value locked growth among all major chains. Okay, major chains in the last month. So what do we see here? Growth. Bitcoin, believe it or not, number 2. And then Hyperliquid, I feel like I'm missing out by not really looking into Hype. I still have not really looked into Hyperliquid yet. And that may be to my detriment. Okay, but SUI's number 1 in growth. Bitcoin's number 2, Hype number 3. What do we do about this? Okay, XRP is last among the major ones. You know, there was a time when XRP took center stage. It's not center stage anymore, but it will be again at some point. So interesting stuff here. Now, stock market related. The S&P 500 is now minus 3% below its all-time high. Last month, it was minus 18% below its all-time high. These quick recoveries tend to see stocks rally more over the next 3 to 12 months. Momentum is strong. We're seeing more and more of a case for a V-shaped recovery. I mean, really, you know, S&P 500 is only 3% below its previous all-time high. And so here's what this looks like a week later, 2 weeks later, 1 month later, 2 months, 3 months, 6 months, 9 months, a year later. Only one time, May 12th, 1975, was it lower, still lower 6 months later. Every other time it was up a healthy amount. But then 1 year later, 9 months later, literally every time, the stock market was up. And so I've expressed to you I'm wavering a fair amount in this idea that we're going to hit a recession in 2025. That has been my base case since 2022, within a year after the first rate cuts. Now, we did have negative GDP report in the United States the first quarter, but it was actually a lot better than I thought it was going to be. And it's looking like, as of right now, that we are not going to have negative GDP in the second quarter. And so if we're not going to have negative GDP in the second quarter, maybe we're in the middle of a V-shaped recovery in the stock market, similar to 2018. Go back to 2018, look at it. In the middle of that storm, it certainly felt like we were going to enter a pretty long bear market, and we did not. And so what does that mean for crypto? That means that it may be that I'm going to change my entire perspective for the rest of this year, and that we will see at least Bitcoin continue to climb throughout the remainder of this year. But something worth monitoring for sure. Moving on. Now, that's talking about this year. But as far as the next decade is concerned, I do believe that it's going to be very similar to what we've seen here. So you see the 30s, lost decades, going into the 40s, that's 2 decades there. The 70s, a lost decade. The aughts was a lost decade in the stock market. I sort of believe that we are about to enter, or maybe in the middle of, another lost decade, between now and the mid to late 2030s. That's how it's going to play itself out. The reason why I say sorta is because the US dollar is fundamentally different than what it was at any of these previous times. Well, yes, no, I was hesitant for a second, but then I am correcting myself. Yes, it is fundamentally different, even than the aughts, even than the 70s, even though the United States dollar depegged from gold in 1971, it is a different dollar right now. It is a post-COVID dollar. And so what does that mean? That means that we can continue to climb and have a lost decade in terms of purchasing power of the stock market while the stock market continues to climb, if that makes sense. So what's all that mean? You know, stagflation, hyperstagflation. I'm not going to read this entire thread from Crypto Investment Strategy, but I'd give it a recommendation. I'm going to give them a follow here. Just check it out. And yeah, crypto cycle _ strategy. I really resonate with a lot of what's being said in this thread. But moving on, Bitcoin is at 105,369 at the moment that I'm making this video. And you can see here something interesting that has developed. Why am I drawing on this screen? Give me a second. We have a 4-touch trend line, more than 4-touch trend line forming here for Bitcoin. And it may be that this is the name of the game for the next month, next couple months here. Let's extend this. I mean, what does this mean? Let's just say, I'm not saying that if we lose this trend line, it's over, but let's just say that we continue to climb this trend line just like this over the next few months. That means on June 1st, we would be seeing a $113,000 Bitcoin. In July, we would be seeing around 130, something like that. And do I expect us to get to 130 in July? I've expressed my opinion, not quite, no. But if we do, great. That sounds like a lot of fun. And what does that mean for altcoins? Well, let's see what happens with Bitcoin dominance. We're kind of in a moment where hopefully we see something like this, where we're hitting a lower high and then we rally to a lower low, maybe bounce off the 200-day moving average, put in another lower high, and then rally down some more. As of right now, that is my expectation. Will that happen? Will it not? We will see. But I'd cry a little bit if we saw Bitcoin dominance rally to a new high here. I don't think that's what's going to happen, but it's always possible, man. So anyway, that is all I have for today. I hope you have a wonderful day, a wonderful rest of your week, and I will most certainly be seeing you in another video. Peace.